Hey everyone, in this video I'm going to highlight one dividend stock that Cathie Wood owns. That's right, Cathie Wood owns dividend stocks. The popular investment manager is known for more of her innovative growth stocks that she invests in, but she does have a few dividend stocks in there, and one of my favorite Cathie Wood dividend stocks to buy right now is Deere. In this video, I'll explain why I think this stock is my favorite or one of my favorite Cathie Wood stocks to buy right now. Starting with the dividend yield at 1.21%, you might say, well, that's not a attractive dividend yield, and I might agree with you. But when I look at dividend stocks, I'm looking more at the potential of dividend payments over the next decade or 2 decades, not just what the dividend yield is right now. And I think Deere has excellent prospects for the next 2 decades, not just right now. And it's already starting to show up in the company's revenue. Look at quarterly revenue over the last decade. It's arguably at one of the best points in its 10-year history at revenue of 15.54 billion. Remember, inflation has allowed commodity prices to soar. Farmers and those that are selling these materials have gotten high prices, and so they're willing to invest in equipment that will allow them to harvest these commodities at a better rate or more effectively or more efficiently, and they have more money to invest in updating and upgrading their equipment. And so the boost in inflation has been a benefit to Deere. Deere's been able to increase prices of its own equipment and selling them at higher than ever profit margins, which I will show you later in this video. Also, the company's cash flow from operations is reaching a peak level. It boosted up during the pandemic and came back down for a while and then is rising back up. 7.77 billion in trailing 12-month free cash flow from operations. You can see here over the last 3 years it's been higher than its rate, its average for the years before the outbreak, when the company was generating somewhere between, I would say, 3.5 billion in cash flow from operations over a trailing 12-month period. Now it's up in the highs again. Now, but remember, let me remind you, it's a bit of a cyclical business. When farmers or those that purchase Deere's equipment upgrade, they typically don't upgrade again for the next 10 maybe years. And so these are long-lasting goods. So right now the company is benefiting from a huge boost and a huge increase in revenue and cash flow from operations. But I'm not forecasting this same level of cash flow and revenue for the next decade. I'm fully expecting that cash flows and revenue will moderate over the next decade. Still, even though I think that will moderate, I still think the stock is in an excellent position to benefit here. And I mentioned earlier that I will talk about the profit margins. Look at these excellent profit margins here for Deere. 23.15% operating profit margin in the trailing 12 months. And the company's shown excellent economies of scale here. As it's grown its revenue, it's increased its profit margin by almost double from the 12% it was at in 2019. So this is something I love to see from companies. When their revenue grows, their profit margins expand. It demonstrates to me that they are getting better at what they do with the increase in revenue. So they make more sales, they learn how to produce their products better, they make more sales, and this time, this next round of sales comes with higher profit margins. Maybe they scale up their fixed costs, and on and on and on. And I like to see the profit margins go up because that means more profits on the bottom line for investors. Finally, the stock is not expensive despite all its excellent prospects, and partly this could be because investors like myself are expecting Deere's profits and cash flow to moderate. They're not expecting these boom times to last for the long term, and so the valuation is not incorporating these types of boom prospects for the very long term. And so you get the stock at a reasonable valuation. In fact, a cheap valuation, forward price to earnings of just 12.17. So for all those reasons, I think Deere is an excellent dividend stock that Cathie Wood also owns that I think you can buy right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.